I'm just not sure these are the levers that need to be pulled. All right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about what the Fed just did and how the markets are reacting. And I want to talk about the actual action that the Fed took and their line of reasoning and what I think needs to happen going forward. So I'm going to give you my 2 cents. Again, it's not financial advice, but I want to share my thoughts on what happened today because I think the market had a little bit of an unusual reaction. So if you're new to the channel, please subscribe and hit the notification bell. And also, there's a link in our pinned comment below to our free Discord where we discuss all things. We talk a lot about Bitcoin and the Bitcoin miners. So let's talk about what the Fed did. So you can see this headline: Federal Reserve raises interest rates by 0.75%, most since 1994, amid effort to slow inflation. So this is the biggest rate hike in 28 years. So I listened to about the first 45 minutes of the question and answer because oftentimes the market reacts just as much or more to what Jerome Powell has to say in his press conference afterwards, and the question and answering even more so than the rate hike itself. Now, we've all been expecting a 0.5% rate hike since the last meeting. They were pretty crystal clear about that. However, we got information on Friday that changed everything. Inflation was not the number that they were looking for, and somehow the Fed did shift gears immediately and basically let everybody know a 0.75 rate hike is coming. So they did not officially release that news, but it became clear. The market priced that in on Monday, where we had a disaster day in the market. However, I do want to talk about it, and I want to talk about whether or not this accomplishes their goal and whether this was the right thing to do or the wrong thing to do. And I will start by saying, first of all, the Fed has an unbelievably difficult job. There are so many massive macro things that affect the economy, and the Federal Reserve only has so much influence. So given that they have a limited number of tools in their bag, I am always of the opinion they should be saving them as best they can. So does a 0.75 interest rate hike help the situation? And I want to talk about a few things Jerome Powell said in specific as to why he did this and why he hopes it's going to help the situation, because unfortunately I feel like I disagree with him. And again, obviously they have an almost impossible job. I don't think there was a right answer for what they could have done today in any instance. So I would have tended to err on the side of leaving some of those points in my bag versus using them today. But the market actually had a positive reaction to this. If we just take a quick look, and it's pulled back off of its highs. The market really had a mad rush while Jerome Powell was talking to the upside. It's pulled back a little, but still a very nice up day. The S&P was up 1.68%. Dow was up 1.13%. The NASDAQ was up big. It was up 2.5%. It was up over 3.5% at about 3 o'clock. And the Russell finished up 1.96%. Bitcoin did have an initial reaction downward, but it recovered at a line of support. So far, all indications are the market had a decent reaction to this. I am a little skeptical to this reaction. This is a market that over the last 7 or 8 months has chewed up good news and spit it out, and I'm not even really sure this was good news. So the fact that we had a positive reaction, I think, may have been just an offset to the negative reaction we had on Monday. Net, we're still in a pretty low place. I am not expecting this to be the bottom. I'm not expecting a long-term rally from here. However, this could be a catalyst to a short-term relief rally. I feel like this is more likely to be a 1 or 2 day event, but you never know. We could get a potential little bit of a relief run up in the market. However, from a long-term standpoint, I don't think this really changes anything for the better. And my main issue is Jerome Powell specifically addressed the fact that the problem we're having is on the supply side. We have a supply chain issue. So by raising the interest rates, he specifically said that he hoped to lower demand to get it more in line with the supply that we have. But the problem is a lot of the demand that he's talking about is for basic necessities. We don't want to lower the demand for food and for home staples that everybody needs. Those are basic requirements, basic standard of living. We're not looking to lower our standard of living in order to lower inflation. There's currently not an excess of demand, and Jerome Powell said that right in his statement. He specifically said this is a supply chain issue. He cited 2 global events that are drastically affecting the supply chain. He cited the situation as Russia impacting the oil and energy side of the supply chain big time. And he also mentioned the fact that lockdowns in China are having a major impact on most of the rest of our supply chain. So this is a supply chain issue. Lowering demand really is not the answer to this. There is a base level of demand for the goods that are needed. So again, And I'm not trying to be critical because I don't know what the right answer is. This is a very difficult situation. Our supply chain is broken. I will tell you, I'm 50-something years old. Over the last 50 years, the only time I ever heard about supply chain was in an economics class in college. However, as of the beginning of 2020, something started to go wrong, and for the last 2.5 years, supply chain has been topic number one. We clearly have a massive issue. It has not gotten any better at all. So like every problem, there is a solution. It will get fixed. Right now, it does not seem to be getting better. In fact, in some ways, it's getting worse before it gets better. I'm not here to rain on everybody's parade. I'm not here to say gloom and doom or end of the world. I just don't think raising rates is going to solve the problem. And if you listen to all the questions that were asked of Jerome Powell after he was done speaking, all of the questions were asking Jerome Powell, is he trying to cause a recession? Because effectively, by raising rates and lowering demand from its natural point, you're not necessarily decreasing inflation, but you are increasing the chance of a recession. So he was clear that that's not the Fed's mandate and that's not what they're trying to do, but also he was clear that that might be a byproduct of what they're doing. So at this point, the market also, I do believe, has priced in the fact that we're already in a recession. That's just my opinion. Statistically, we haven't reached that second quarter in a row yet to confirm that, but I feel like the vast majority of the public feels like we are in a recession. So the price of energy is sky high. It's at an all-time high right now. That is not helping. At some point, sooner or later, the changes that we actually do need will occur. I remain optimistic. So again, I want to reiterate, this is not some kind of gloom and doom scenario I'm trying to paint for you. Our economy has had troubles before. This is not our first recession. This is not the first global recession. So these things happen. They're a natural part of the cycle. However, with the supply chain, I do think we're going to see some unique responses to this. The supply chain's been broken for about 2.5 years now, and I don't think the supply chain that existed is coming back in the form that it was. In other words, I think there's going to be a lot of companies that innovate, and there's going to be a lot of vertical integration because these companies cannot just wait and hope that the rest of the world fixes their problem. They've got to lock down the goods that they need to make the products that they're making so that the supply chain is not a complete disruption in their services. And I'm talking about everything from auto manufacturers on down the line. Every business is reliant upon other businesses to get pieces and parts of what they do. So I think you're already seeing a massive move to businesses vertically integrating so that they're not dependent on somebody else. They themselves are doing that. You see Elon Musk talking a lot about going and getting some of the precious metals required to make his batteries. You know, it was a couple of months ago, he talked about maybe mining those on his own rather than have his supply chain held up by others. So I think you're seeing a lot of companies make those moves. Some of the companies I invest in specific, are moving towards a vertical integration model. Now, it's, not everybody's going to be able to 100% vertically integrate their entire business, but the more crucial pieces that they can bring on board, the less they will be exposed to the supply chain issues that are at hand. So on a going forward basis, Jerome Powell talked about the fact that there will be more rate hikes. He talked about the next meeting will either be 0.5 or 0.75. So we've got another potential historic rate hike on the horizon. And when asked, potentially if it would be higher than that, and, he was not able to rule that out. Obviously, based on everything that's happening, it's likely that if he did the 0.75 this time, they will do it again the next time. So my fear is that they run out of ammunition here because they're using it all very quickly. And there is only so many rate hikes that the Fed can do. Other parts of the economy start to break down significantly if the rates get too high. In addition to that, they re-stress that they're shrinking their balance sheet. So there's a lot of forces that they're using right now. I'm just not sure these are the levers that need to be pulled. So we're going to see what happens. The market today reacted just fine to it. In fact, it was almost a little bit of a relief rally. However, I remain extremely skeptical on today's action. I do think that in general, what happened today doesn't change anything, and what has happened to most rallies is they are extremely short, and the market has ended up hitting lower lows. On Monday, 3 of the 4 major U.S. indices hit their 52-week low. Almost the entire cryptocurrency environment is at a low. In fact, the total market cap of the cryptocurrency world went under $1 trillion. So is this a bottom? We don't know. I don't know. I will never predict a bottom. I have said that I think we're bouncing along the bottom, but how much further down we we have to go and how long it takes to recover obviously is anybody's best guess. But what I will say is my 2 cents is that I'm going to be careful. I'm going to look for companies that are properly positioned, companies that are vertically integrating, companies that are in control of their own destiny, both from a cash flow standpoint and from a materials standpoint. So that's what I'm going to be focusing on from an investment strategy. So let me know what you guys think of what the Fed did today and what you think the effects are. Are we in a recession? Drop me your thoughts in the comments below. So those are my thoughts on what happened today. The market had a positive reaction. Either way, it's not the end of the world, but I am by no means ready to call a bottom in the market, I guess would be my point. Please let me know what you're thinking. And if you made it this far, remember to subscribe to the channel and smash the like button. Thank you so much for watching, and we will see you in the next video.